Well, the global stock market sell-off continued on Monday with shares across Asia sharply lower and Shanghai stocks down 7%. Fears are growing that a slowdown in the Chinese economy could send the rest of the world into a recession, and that's because a lot of countries depend on China to buy their products. Well, the Chinese government is allowing pension funds to invest in the stock market as it tries to support the market. Adrian Brown is in Beijing for us. Is this good news then for the struggling Shanghai exchange?
Well, Luquez, you don't need to be an economist to understand that there are some very strange things happening to China's economy right now. On Friday, the Shanghai index closed down 4%. This morning, after just an hour's worth of trading, it is down by more than 8%. That is a very bad start to the trading day. Now, just before the market opened on Monday morning, the State Council announced that it was going to use the state pension fund as a way of trying to reverse the decline in the market. Billions of dollars of state workers' money is now being used to try to prop up the market. This is the first time that it's happened, and it is a measure, I think, of the government's desperation. We also have to put this in some sort of context. Not only is the market falling, China's economy is also slowing, and during the past 10 days, the Chinese currency, the RMB, has lost more than 4% of its value against the US dollar. Now, China, of course, for the last few years has been very much the engine of global economic growth, but now the world, the outside world, is beginning to understand that that may no longer be the case, and that is why you're seeing markets falling not just in China but also elsewhere in the world. Hong Kong is also down this morning. Tokyo is down, as well as the All Ordinaries Index in Sydney. Luqueza.
And just very quickly, Adrian, there could be further turbulence, not only for China, but like you say, global markets. Oil prices are down, and of course, everybody is waiting on these US GDP figures this week.
That's right, and also factor in that the fact that the US Federal Bank, the US Reserve, is due to announce whether it's going to raise interest rates. How is that going to factor into what's happening here in China at the moment? I think what is clear is that we have not reached the bottom yet, and the malaise is going to continue in equity markets, I think, for days to come.
Adrian Brown, thank you very much for that. Speaking to us there live from Beijing.